Where are interest rates at today? Where are they headed? That's what we're going to talk about in today's video. Two of the most common questions I get when talking about the housing market is, what are interest rates doing? Where do you expect them in the next couple of months? Do you expect them to go up high enough to slow, the craziness in the housing market so that more supply can come on? All of that. So I want to spend a little time and talk about it in detail because we saw interest rates go up considerably from early February to early April. We're talking about 0.5% in interest rate. And, I talked about it in another video, which I'll link to here, that, that rise in rates could actually be beneficial to the housing market because it could slow buyer demand just enough to allow supply to build so that, home buyers out there have more options when it comes to purchasing. And just give people an option, give people more options rather to get into the housing market. And that way everyone's not bidding on the same house or few houses. Maybe, that rise backs that buyer demand out just enough to give people, an opportunity to put in, a couple of offers on a couple of different properties versus one offer on one property bidding against everyone else and really taking that price upward. And that's what we've seen a lot of. But what we've seen in the last couple of weeks since the first week of April is actually interest rates have improved about 1/4 to 3/8% in most cases. So I want to, talk about where rates are today to give you an idea of, if you were pre-approved months ago, or maybe you're in the process of building new construction and you're wondering where rates are right now. Let's talk about it, right? To give you an idea of what to expect. And as we move through the video, we'll kind of talk about where interest rates will likely be in a couple of months from now, just based on everything that's going in the housing market. For those that don't know me, my name is Jeb Smith. I'm a real estate broker here in Southern California. I'm not a loan officer. In fact, everything that I'm quoting today with regards to interest rates actually came from my mortgage lender here in Southern California. And I'm going to quote these rates based on what he gave me. So, this isn't me quoting you rates. This is me just relaying the information from my guy to give you an idea of what to expect if you're out there, shopping in this housing market. Before we start, let's keep in mind that everything I'm quoting today is with a 760 credit score. These are no cost, no point, no fee loans. So, that means that you're only paying the closing costs that are associated with buying the property. You're not paying any lender fees to the lender with these interest rates. Now, this is my lender. Your lender might vary a little bit, but this should give you a pretty good idea of where interest rates are. So let's start today by talking about FHA. FHA standard balance is at 2.375%, whereas a high balance FHA is going to run you somewhere around 2.5%. VA standard balance also at 2.375, and the high balance is also at 2.5. So FHA is pretty much in line there, 2.375% on the standard balance, 2.5 on the high balance. Conventional standard is at 2.75 today. Conventional high balance is at 2.875. And then you have a 15-year standard balance at 2.25 and a 15-year high balance at 2.25 as well. So 2.25 for 15-year standard balance and high balance. And then on the jumbo side, we're looking somewhere around 3% with a little cost and 3.25% with no cost. So hopefully that gives you a little idea of where interest rates are. Now, keep in mind, they've come back about 0.5%, as I mentioned earlier, from their highs, and likely trend lower over the next couple of months. Now, the reason I don't think interest rates will go much higher from here is because, the Fed has already come out, right? Now, interest rates aren't directly tied to the Fed funds rate. I know that. But the Fed has come out and said that they will likely keep interest rates low through 2023. Now, they're talking the Fed funds rate there, which, again, doesn't directly impact interest rates, but interest rates more or less follow the Fed funds rate to some regard. So with that said, if they're planning on keeping interest rates low, the Fed funds rate through 2023, and the reason for this is because they don't really think that inflation is going to be a problem anytime soon. Now we have seen inflation numbers come out. We saw them, Tuesday of last week. We saw these numbers come out, and they were more or less in line with what was expected, which was in the high 2% range, which shows some inflation. But the way that inflation is calculated actually makes the numbers appear higher than they actually are. So as we move past the worst months of last year, which were March, April, May, and we start to add the numbers from this March, April, and May, those numbers will even out a little bit. And as you move towards the end of the year, you'll likely see those inflationary numbers come down, which is more or less why the Fed has said that they're going to keep the Fed funds rate low for the interim. So if the Fed funds rate is going to stay low, chances are interest rates are going to follow that and not really go up from there. So if you expect interest rates to stay low, and supply isn't likely going far either, because you have moratoriums again on evictions. You still have moratoriums on foreclosures. And the CFPB has also come out and said that they would actually like to push foreclosures off, more or less extend that moratorium even further and through the end of 2021. So no foreclosures actually coming to the market until 2022. Now that hasn't been passed yet, but either way, you're not likely to see any, foreclosure wave, any big, supply of property come to the market anytime soon. So with that said, you're likely to see housing prices continue to move sideways to up for the foreseeable future while interest rates stay low. Now, if interest rates did start to rise and rise considerably, because we saw them rise again 0.5% from the low, and it didn't really do much to the buyer demand. But if we saw interest rates rise substantially, we're talking into the fours, low 4% range, even mid 4% range, we're likely to see buyer demand start to slow at that point. Now, again, we're talking, it would take time for that to adjust to the housing market enough where, you would actually start to see supply build. But that's the only real thing I could see slowing the housing market, in the next 12 months or so. And I don't really see that being, realistic at this point. So you're likely to see interest rates continue to move sideways, by maybe 1/8, 1/4% either direction. So if you're somebody that's on the sidelines, you considered refinancing last time, and then you went to refinance and rates had gone up because maybe you were waiting for them to trend lower, or maybe you were just starting the process and hadn't really got into it yet, and actually rates went higher than where you thought they would be, so you put it on the sidelines. My suggestion is, if it makes sense now, take advantage of it. Just don't pay, don't pay discount points. Don't pay, don't pay fees to your lender. If possible, get an interest rate that makes sense without paying fees. And then, see how long, if you do pay fees, see how long it actually takes you to recoup the cost on that mortgage, right? If it's a short period of time, then you may consider refinancing now versus waiting to see if rates trend back even lower. And then if they do trend back lower, maybe you're in a position again to refinance at that time. But waiting and trying to, time the market perfect, it is a fool's game, right? We've seen it many, many times. And if you're one of those people that tried to do it and saw rates go up, you understand how that feels and what I'm talking about. So, and if you're on the home buying side, just understand that rates are going to move a little bit here and there. So, once you get ready to write an offer on a property, check with your lender just to make sure rates are where they quoted you initially, so that you have accurate information and can get an idea of what your monthly payment's going to be, and make sure that rates haven't gone, outside of your comfort zone. And if you don't have a lender, you're looking for a lender, you need somebody, do me a favor, reach out to me directly. I'll refer you to somebody that can guide you in the right direction. I'll put you in good hands there, so that, what you're getting quoted is accurate. But also check with, maybe check with another source as well, just to have something to compare it to. But if you have questions for me, do me a favor, comment below. If you're new to me, new to my channel, it's all about real estate, helping buyers, helping sellers just navigate the home buying, home selling process. So if it is of interest to you at all, do me a favor, hit that subscribe button, hit the like button if you enjoyed this content. But for now, I appreciate you taking the time to watch. I appreciate all the support. Hope to see you again soon. Have a great day. Bye-bye.